Good morning, everybody, and welcome to our FinTech Summits. It's the first time the GSMA has ever had a FinTech Summit, so delighted to welcome you all here today on behalf of my colleagues at the GSMA and also on behalf of our sponsors, Accenture, and also Citi. Big thanks to them for their helping shape the whole proposition for today. My name's Brian Gorman. I'm the FinTech lead at the GSMA, and as I said, really big welcome to you today. First time we've done it. Great to get your feedback today on what's gone well and the things that we can actually improve on. This is our agenda for today, so it's quite a full-packed day. We decided to dive in with both feet, as we'd say, and put a really full agenda together. It's basically based on the feedback we get from our colleagues, so members and associate members, that these are the key areas that they focus on. So if I could just spend a moment to introduce this to you. In the first session, we're welcoming Citi, DT and Telco, who will share their thoughts on the digital asset landscape, the latest trends, what it means to the mobile ecosystem, opportunities and challenges for mobile operators. Unfortunately, as you all know, fraud is still a major problem right across the whole of the world. We're going to look at a specific use case really around scams, and we're going to be welcoming 4 of our colleagues from Telefonica, Prove, Ant Group and iConnective to look at the work they're doing basically to fight back against authorized push payment fraud, so scam fraud. At the session at lunchtime, or just before lunch, Rich will chair a session on the Metaverse. So this is particularly looking at things that are happening right now. So things that are deployed and working right now, not something that's going to happen in 10 years. In that session, he'll be joined by Azure, Accenture, and also Mawari from Japan to look at exactly on case studies that have been deployed. Our whole theme here is things that are practical, things that are really happening. And so in a FinTech disruption session, again, we'll have 3 case studies, Safaricom, Vion, and Yabex, looking at things that have been developed, deployed, in market, and working. And then finally, clearly, it wouldn't be a FinTech Summit without a payment session. And in the last session, my colleague Asta from Accenture will chair a panel to look at the latest trends, but also, plus more importantly, what colleagues from those businesses are actually physically doing about those trends. And that panel will include Vodafone. They've just launched a new IoT proposition on Monday this week, which you may have seen in the media. Huawei, Accenture, and Block. So we hope that's a really good session to finish the day off with. So it's a fantastic session. Some of you will come and go. If you are here for all 5, I'm sorry you may hear this again. That's probably a good thing from my point of view because it means it's a really interesting day, but it may be a bit repetitive, so forgive me for that. And when we finish at 4:15, we'll have a drinks reception just across the way behind us. So you're most welcome to join us for that, however much of the day that you do spend with us. So I would, just before we dive in and start, I would like to mention the GSMA's FinTech Forum that we're creating will meet for the first time on March 31st. So the GSMA brings together colleagues across the ecosystem in a number of communities already: automotive, manufacturing, aviation. These have worked for many, many years, and we've now decided to create a new one on FinTech. It will meet for the first time on March the 31st. We'll give you the links at the end of the presentations to how you can get involved if that's something you'd like to do. And today's session very much reflects the themes and the areas of focus that we've gleaned from our conversations over the last 12, 18 months. And so to today, this first session is on the digital asset landscape, which will be a super session. Just for your information, the 3 colleagues, the 3 companies who are presenting here presented to the GSMA strategy group, which is all the major strategy heads of all the big telco groups on Saturday. That went really, really well. It was very informative, extremely insightful, and provided lots of food for thought for the telcos of where the challenges and opportunities are. This is our agenda today. We've got 3 keynote speeches, and then I'll be joined by my colleagues on the panel, and hopefully we've got some time at the end for me to just talk about some questions. So first, Sophia will be joining for Citi, presenting Citi's global perspective on opportunities and challenge on digital asset landscape. Jens will then join from mobile operator, what DT are physically doing right now, what their scan of the environmental landscape actually is. And then finally, Julia from Telco will be sharing her view on the Telco proposition and the work she's doing with mobile operators. And then they'll join me for some questions at the end. So without further ado, I'd like to introduce Sophia to take over and provide our first presentation. Sophia?
Thank you, Brian, for that wonderful introduction, and good morning, everybody. I'm Sofia Bantanidis. I work for Citi Global Insights, and within that division, I'm in the Future of Finance team. I've been with Citi since 2016, primarily in the transaction banking business, and I've worked for a range of different banks before, and also 2 different regulators in 2 different countries. It's a real pleasure to be with you here this morning and to talk about a topic that we spend an awful lot of time discussing with our clients and our partners, and it also goes to the heart of what my team does, namely to analyze trends and themes and to paint a picture for what the future of financial services will look like. Bear with me while I flip slides. Yes, here we are. So I'm going to talk about digital assets. And to start off with, let's look at digital assets against the backdrop of emerging technologies that will transform the future of economies, societies, and businesses. Now, some of these technologies that you have up there on the slide are at an infancy stage, and some are more developed. And when combined with one another, they reach an inflection point. Think about 3D printing, for example, and advanced robotics. Well, those things wouldn't exist without computing power or AI. Or think about genome sequencing, particularly relevant and vital for COVID-19 diagnosis and for control efforts. Well, you can't do it as quickly and relatively cheaply, again, if you don't have the computer power. Cast your minds back to the Human Genome Project, which took 13 years to complete. It cost $2.7 billion, and today you can do it in a few hours and for less than $1,000. The World Economic Forum did a study. They studied and interviewed 800 engineers, scientists, business executives, and they were asked about the impact of the 4th Industrial Revolution across 20 different inflection points, and the likeliness of occurrence by 2025 presented as a percentage. So what were some of those key findings? Well, over 90% said that 10% of us by 2025, which is not that far away, will be wearing clothes connected to the internet. So I know what I'll be wearing for Mobile World Congress 2025. Over 85% said the first 3D printed car will be in production. Over 75% said that the first 3D printed liver transplant is likely to happen by then. And over 50% of respondents said that companies would have robots as directors. So that might amuse you. But the impact of all of these technologies combined will be profound in businesses around the world, including the business that I work in financial services. And that's the perfect segue to look at the assets of the future, namely digital assets. So what are digital assets? Well, they can be defined as non-tangible assets that are created, traded, and stored in digital format. And the emerging digital asset ecosystem covers everything from insurance to trading and settlement. And there are various different value drivers, from faster settlements, reduced reconciliations, better liquidity in specific markets, just to name a few examples. And the purpose of these digital assets certainly varies. Now, there are many that function as a digital medium of exchange, or they provide a right to use a particular product or service, or they provide rights to an underlying asset, for example. They also come in a variety of different forms, and new digital assets are emerging every day. There are all sorts of use cases emerging, from those related to money and the future of finance, to real estate, and to everything in between. And when we reflect back on the technology trends I covered in the slide before, digital assets, I think, are a reflection of the world we live in, which is a world of now, a world of quick response, and a world of instant fulfillment. So let's look at examples of digital assets in the context of financial services. So you have a few up there on the slide, but I actually want to move on to the next one, which is a bit more detailed, and I'm going to spend quite a bit of time going through everything on this slide. So digital is taking over the world, and money is no different. Money is changing. Now, apart from any notes and coins you might have in your purses or in your pockets, most money in the financial system is digital money already. It is intangible, it's electronic, and it's in digital format. And the contest between physical money formats and digital money formats is drawing to a close, just as streaming took over from physical methods of storing digital music. And digital money is winning. Now, what the new era is about is a space race underway between different types of digital money 2.0, as we like to call it. And the future of digital money is going to play out across two different dimensions. Now, keep this in mind when I go through the various points on the slides. So what are those two dimensions? Number one, representation technology, tokens versus accounts. Number two, the underlying legal instrument. Is it a liability of a central bank or of another institution, or versus non-liability forms of money? So let's look at token versus accounts first. And tokenization is really, really important. It's fundamental to our Money 2.0 definition. So when we say money based on tokens, we mean chains of digital securities. It could be offered by unregulated and regulated entities. It could be on a public or a private DLT database. It may or it may not represent a liability of an institution. And it comes with a whole host of benefits. It's programmable through smart contracts. It provides atomic settlements, so the token transfer equals messaging and settlement. And it benefits from an always-on infrastructure. That's tokens. Now let's look at accounts. Accounts are based on double-entry bookkeeping ledgers. They're offered by regulated banks, like Citi, for example, and non-banks. They operate on traditional database technologies, and they are the liability of an institution to a depositor and programmable through APIs. So let's look at the different digital assets up there on the slide against those two dimensions. And we think all of these digital assets are in a race. We think it's a 5-horse race between these different digital assets, but there's something very special about the race, and I'm not going to tell you about it just yet. I will come on to it, so keep it in mind. So it's a race between CBDCs, commercial bank money, e-money, cryptocurrencies, and stablecoins. And a few things to bear in mind as we go through them. There are various factors that will impact the race. For example, geopolitics. And do these digital assets come to the fore because one country is perhaps proceeding very fast with one of the digital assets? And what influence does that have on other countries? Then from a market perspective, you need to think about how you further improve your domestic infrastructure across all connections, security, and payments to make sure that they work more efficiently. And to ask, well, is that through one of these digital assets like CBDCs, or is that actually through fixing or upgrading the underlying payment rails? That's the bigger question. And then it's also important to ask, what is the motivation for some of these coming to the fore, like CBDCs? Is it yet another instrument, or is it part of something bigger? And certainly the pandemic accelerated some of these developments with cash declining and people starting to realize that really this is the only central bank liability that I hold, fiat money. So it is safe money, assuming, of course, one is in a safe country. So let's go through them. CBDCs, central bank digital currencies, are issued by governments or central banks as a digital form of fiat money. So today, like I mentioned, the only form of central bank money that citizens, that you and I hold, is the money we take out from the ATM machine or the coins. Banks, of course, already have access to central bank money in bulk through the interbank system. Remember the two dimensions I spoke about earlier? Liability. So this is a liability of the central bank. In terms of value, CBDCs are very similar to e-money because they're the digital representation of fiat, of physical cash. And in institutional terms, CBDCs are quite different to e-money because they're the direct liability of a central bank. So that's CBDCs. Then we have commercial bank money, also digital money. This type of money is a liability of the commercial bank. It's stored in accounts, and it is the dominant form of money today. Then we have e-money, very different form of money. It's based on accounts. It's electronic. It's a liability of the issuer. The issuer is a regulated player. They are a regulated non-bank. So it's issued by an e-money institution, which is regulated under e-money laws around the world. And these institutions don't receive deposits and they don't pay interest. It's redeemable on demand and at par value. It's like the money you have that's stored on a device, like a mobile phone. Then we have public cryptocurrencies, another digital asset. It's in digital form. It's token-based. It's not a liability of a central bank, nor is it a liability of a commercial bank. This is not on anybody's balance sheet. Cryptocurrencies like Bitcoin and Ethereum, they're based on P2P architecture that allows digital value to be transferred without a central authority. Cryptos, as the name suggests, relies on cryptography, the mathematical process of encoding and decoding information to maintain the security of transactions. The value of cryptocurrencies in fiat depends on the supply and demand within its network of users, and it is extremely volatile. Let's look at the next category of digital assets, stablecoins. These have emerged to address volatility and to try to remove it. So it is a crypto asset that aims to maintain a stable value relative to a specified asset or a pool or a basket of assets. It acts as a bridge between traditional fiat and other crypto assets which are traded for speculative purposes. It's grown a lot over the last year. It's token-based. It's privately issued, and it operates in a gray zone with respect to liability. It is not always clear what legal claim the stablecoin holder might have to an issuer or to the stablecoin reserve asset, and there is no contractual relationship between the two. So remember I said this was a race and there was something special about the race. Well, here's the punchline. In the case of digital money and digital assets, all the ones I have outlined, we think there's probably space for a number of contenders. After all, new roads create more traffic, not less. The digital payments market is going to continue to grow. We see it growing double digits year on year, and we think that trend is likely to continue. And we think all these different forms of digital money, digital assets, whether it's based on tokens or accounts, liability, non-liability, we think they are all going to coexist. There's a lot of vested interest in the space. And also, once one becomes familiar with one type of digital asset that's tokenized, one will use more and more of these instruments. So let's look at some market trends. We think the direction of travel is pretty clear. We don't think digital assets are going to go away. They will be part of the future of financial services and markets. And the market trends certainly indicate that momentum is accelerated. Everybody's talking about digital currencies, and the public interest in these is at an all-time high again. Google searches for digital currencies have been rising. That's on the top left-hand side. The combined value of private cryptocurrencies also hit an all-time high in early last year, 2021. That's the diagram at the bottom. And the speeches by central bankers on CBDCs are at an all-time high. Almost every day a central bank makes a speech on this topic. They've certainly been analyzing CBDCs for a while, and there are many factors that have led them to accelerate their efforts. The Bank of International Settlements often produces reports. It's tracking the efforts of central banks around the world. 85% of central banks are engaged in it. That's at 2020 compared to 65% in 2017. And like I mentioned, COVID-19 also accelerated this ongoing change in customer behavior towards digital finance. So let's look at the impact of all of this on the mobile ecosystem. You might be asking yourselves, well, what does this mean for me? Well, I think mobile operators have a very important role to play in something called the Metaverse. The Metaverse, and you may have heard about it today in the different speeches. There's a keynote on this actually right now. The Metaverse represents a paradigm shift in technology. It is the next generation of the internet. It represents the integration of our lives into digital platforms that combine the physical and the digital world, intermediated via possibly virtual and augmented reality. And there are many ingredients that will come together to build the Metaverse, apart from the actual hardware. The other main ingredient is the mobile infrastructure that is going to power the Metaverse. And the digital assets are the organic form of finance within this Metaverse. Many entities and applications within the Metaverse are mobile only already, like gaming and play-to-earn games, accessed only from a cell phone or a tablet. And 5G and beyond 5G, it will provide the speed needed to support this technology. And it is the network required for the first stages of the Metaverse. And for us to enjoy the Metaverse experience, we really need sound and stable infrastructure, including 5G. That's really, really important and fundamental to access an immersive Metaverse at scale. And as I speak, my team is actually researching this, and we will hopefully be publishing a report on it soon. So let's look at Citi's efforts in this space and our engagement. I appreciate the slide is a little bit busy. I hope you can read it. I joined Citi in 2016, and way before I joined Citi, Citi has been investing in innovation and in different types of technologies like DLT. We've been taking a strategic and incremental steps to deepen our knowledge in this space, identifying both the risks and opportunities that the technology presents, and understanding the ever-evolving and ever-developing regulatory framework. Citi Ventures, our venture capital arm, we've made a number of investments in this space. Most recently in December last year, we invested in a company called TRM that allows financial institutions and public entities to detect and to investigate crypto fraud and crypto financial crime, because we're eager to support companies that forge a safer, more reliable, and more trustworthy digital asset economy. We're also participating in key industry consortiums and ecosystems like Comgo. We were one of the founding members of the Comgo platform. It uses digital networks to transform global trade and to unlock new value for the ecosystem. And also Contour. We were founding members along with 7 other banks, and we use blockchain to enable the drafting and submission of letters of credit in real time on a single platform. And we executed our first letter of credit on this platform in December. We set up our FinTech accelerator where we mentor startups. We run this out of Tel Aviv. We've participated in multiple central bank digital currency experiments with central banks like in Germany and in France. We have a dedicated digital assets team in the business and within controls. We created our digital assets group in November, made a public announcement on the back of that, and we also launched a digital assets division within our wealth management business in June last year. We've produced numerous research reports and papers on the future of money. Watch this space. And all of our activities are, of course, underpinned by a governance framework to ensure that our efforts are aligned with our risk appetite and that controls have been established. We're taking a phased approach to digital assets, products, and services that is consistent with our risk appetite. So these are our areas of focus. I covered most of them already, but perhaps I'll point to 2 things in the use cases maybe. At present, our commercial initiatives are limited to products and services that will not require us to engage with physical cryptocurrency, but more in a synthetic manner, like regulated futures or exchange-traded notes. In addition, we are planning learning-driven exploration for custody and trading of physical cryptocurrencies. These are explorations only. They're not envisaged to be of commercial nature at this time. They're rather there to help us test and learn about the operational risk and technology requirements that would generally support all digital assets in the future, especially regulated products such as digital securities. And finally, to wrap up, here is a shopping list of some of the investments that I covered earlier. That's all I will say. Watch this space. There is more to come. Thank you.
Thanks, Sophia. Thank you to Sophia for a really inspiring presentation. It's great to get a perspective from one of the largest banks in the world and how they respond to the challenges and opportunities of a brand new ecosystem with all the kind of a large bank, all the responsibilities and obligations that they have to investigate it. It's fantastic to see some of these investments and the work and the pilots that they've done across the world. I think now we'll move on. So now we're going to have a presentation initially from Jens. So Jens is going to share his thoughts on DT. DT been extremely proactive in getting started, which is really important in this space. And then Jens will be followed by Julie giving her perspective on the Cello proposition as well. Jens?
Yeah, thank you very much for this. Great to be here. I want to show you a bit what we are doing at DT in terms of crypto, in terms of blockchain, things like that. Before that, I will deep dive a bit onto what are digital assets. So basically, what Sophia just said, I will run through it very fast because you just heard it, but you have here some other examples what the industry in general is doing. So within DT, I work at the strategy department, so my main task there is currently to look at all the things about crypto, digital assets, Web3, things like that, and figure out the way how we want to deeper involve in this ecosystem. So what are digital assets? I mean, you just heard it. Here are some examples. I mean, you might be familiar with. I guess most of you saw Bitcoin, are familiar with ETH. But look at the other things like the guy holding the sneaker up in his hands. I mean, this is also a digital asset. I mean, the sneaker is a digital NFT that he can use, but also his hat, the glasses they're wearing, all of this is digital assets. The landmark below you see, that's the map from Decentraland actually. So all the pieces there, it's the bits of bytes here you can buy. These are digital assets, these are NFTs. But also the name you see there, Jensen.eth, that's a digital asset. That's a domain name on the Ethereum blockchain. So please do me a favor. I'm trying to bid on this on OpenSea. So please don't bid higher than me because I want to have exactly this name. And the other one on the downside, that's the whale. That's an NFT you also know. But also look at the green symbol and the yellow one below. These are also digital assets. The upper one is the Celo stablecoin, the Celo Euro. And the one below, it's the Celo token, the native asset, the utility token. That's something we as Deutsche Telekom invested in last year. You just heard also from Sophia from Citi how these things are connected. Here's again an overview how to distinguish between the several versions of tokens and digital assets out there. So in general, yes, we can see and say that you divide digital assets into digital currencies. These digital currencies can be centralized, in this case a central bank digital currency. Very well familiar and very well known is the digital yuan. Also, another way of, let's say, a digital currency is the decentralized version of that. These are the stable coins. These are unpegged coins like the Bitcoin, or in a stable coin, the Celo Euro, as I just mentioned before. And also we talk about tokens. We divide them between utility tokens, security tokens, and non-fungible tokens. So why are they matter for telcos? Here comes now the interesting thing. So that's actually a chart from November 2021. So that's why the Bitcoin price for sure is lower than it was at that day. But I mean, just to see why crypto matters is because there are two waves, two major waves. The wave from 2016, 2019 was mainly driven by retail investors into crypto. So people trying to figure out what is crypto, how can I get a wallet, how can I sign up for it, how can I use it, how can I buy crypto, how can I handle crypto. But the second wave, that's the wave we're in now, is driven by large corporates, by institutional investors. So some of them you see there like Tesla, Square, MicroStrategy, but also we as DT. We are deeply engaging in this ecosystem. We are on a daily basis handling with crypto because we provide infrastructure services for the blockchain environment. What this means, I will show you to this later. So in the original graph of this, the T logo was not in there, but just for completeness of the story, we included it in here. So if you look at the original source, we won't be in there, but I added it here just for completeness. And the market is really growing between the two waves. There is a heavy increase in crypto. And we see that even more of these things will happen in the future. Why? Here's another example on that. I mean, maybe this is more familiar with our industry. You see here the development of the internet, how long it took basically until the internet reached, let's say, 5 billion users. And we in crypto in general, right, we're still in the early days. Early day means it's not too late for our industry actually to get into this and to conquer the business models of a decentralized infrastructure, because this is still growing. And I believe personally that it will be much, much faster to reach, I mean, a higher number of users in crypto than it took with the internet. Just some things to clarify when we talk about Web3, Web 3.0. I mean, what does it actually mean? So in general, the digital assets, they rely on infrastructure, like the whole telco did, right? With voice, infrastructure we built out in the early days when the internet became popular. Web 1.0 is building up on the internet. Web 2.0 is building up on Web 1.0. And Web 3.0 is exactly doing the same. Also, the mechanics are based on the Web 2.0 environment. But there is a fundamental difference between Web 3.0 and Web 3. So Web 3.0 is basically the further development of Web 2.0, which incorporates now new ways on how to interface, like with XR devices, but also the data logic behind is mainly driven by AI. And this is also, when we talk about the metaverse, so the Web 3.0 is basically kind of the metaverse. And then you can distinguish between the data layer, because this is actually the blockchain layer, the Web 3 layer I'm talking about. And here we also see two different versions of the metaverse, a decentralized approach and a more centralized approach. But all of this fits into the Web 3.0 environment. The interesting thing, the major players in Web 3 are not yet identified, right? Because it's a decentralized ecosystem, it's a decentralized version of that. So all of us, everyone who wants to engage can engage in this ecosystem. The rules of engagement are written in code, are written in smart contracts, are written in white papers. So it's very transparent for every organization to figure out what their part will be in this environment. Some examples you might be familiar with what our industry is facing on the Web3 and tokenized business models. So then wireless is an interesting example. We as telcos basically selling tariffs to our customers. So then wireless decentralized exactly this approach. So you can download an application on the App Store, and you can basically sell unused connectivity that you do not need anymore to someone else. So there's a marketplace where you can sell unused connectivity, data, and voice traffic. So basically for roaming, that's an interesting one. Usually, if you do roaming in countries that you're visiting, you don't need it anymore. It's an eSIM profile you download, and you can buy connectivity that you want to have from someone else nearby. ASCII network is also a very interesting development, because I just talked about NFTs, right? NFTs, you always figure out NFTs are this fancy, expensive JPEGs, but look at the ASCII network, what they're doing. It's not expensive JPEGs anymore, because here, NFTs, in this case called smart NFTs, they provide now functionality to IoT devices to open a door, to get access to a hotel room, for example, rental cars, things like that. All of these things are possible with NFTs. Helium, also a very interesting example. We as operators, we build out infrastructure centrally, which means there's one entity building out infrastructure. While with Helium, this is being decentralized. Everyone here in the room can buy a Helium router connected to their own landline, and then you're part of the fastest growing LoRaWAN network out there. And you're being incentivized by tokens, so you will earn tokens by doing that. And ClearX, also a company we invested in 2019. It's pretty remarkable what they're doing, because when telcos interact with each other, specifically on the backbone side, on the roaming side, voice side, things like this, you always have clearing and settlement to do. Now, we can do clearing and settlement on a ledger-based, which means we can directly interact with other telcos by running blockchain-based infrastructure and create own business models on top of that, own clearing and settlement businesses on top of that, without relying on a third party in between. And the interesting part is, this can be extended also to the billing part, because now we can use, for example, a stablecoin to interact with each other. No transaction fees anymore, very fast cross-border transactions, and specifically for our industry on the B2B side, that's a very interesting approach coming up. Let's come back to the story of NFTs. I mean, yes, for sure, if you look at these numbers, I mean, in 2020, we were talking about 300 million market cap, and yes, it immediately jumped up to 40 billion in 2021. Yes, for sure, there is a hype in it, absolutely. But also, there is a lot of demand for it. People buying NFTs, younger children buying NFTs, they want to be dressed up yourself in a digital way, they want to be part of the Decentraland environment, they use Sandbox as a decentralized version of the metaverse. And they're really active in this environment. So I'm even assuming that the number of NFTs being sold will grow heavily in the next couple of years. And all of these are digital assets being transferred over the internet by our users. So how can we take part in that? Well, it's the wallet. Wallet is basically the way to enter the Web3 environment, right? And handling digital assets should be as easy as sending an SMS or a message. And that's the interesting part. That's what also Julia then later on will talk about this one. This is exactly what Celo is offering, the Celo blockchain. That's why also we're engaging with them. What exactly are we doing? In 2021, we are invested strategically in the Celo blockchain network. So we were the first telco who was actually buying a utility token that we're holding in our books, that we're managing, Why are we doing this? Because a utility token gives you a right to access, to maintain, to govern a network. We're not doing this alone. It's basically a bit large network where everyone can be part of that. But the interesting thing is you're combining the wallet address with a mobile phone number, a key asset we as an industry have. The other thing, Celo is a green, mission-driven environment. I mean, really, they have a purpose behind. Everything is open source. It's auditable. And as I said, the rules of engagement are written in code. And really, the main product that they have are the stable coins on a blockchain. And stable coins, it's programmable money. I mean, I guess we are all familiar, we're talking about CPaaS, programmable communications. Programmable money for our industry is a very remarkable development where we need to be, let's say, take over an active role. In order to do that, you need to have several partnerships. So that's why we're also working together with Andreessen Horowitz. They use our infrastructure for staking. And also we are working together with Coinbase because it's a bit complicated on the side that you need to manage digital assets via custody provider. And this is what we're doing. To summarize, we are providing several infrastructure services for various blockchains out there. We do validation nodes, we operate our own clouds where our customers, blockchain networks basically can spin up their own validators. We're being paid in cryptocurrencies on a daily basis, and we're handling on a daily basis cryptocurrencies. And we also open our SMS APIs to infrastructure services on the Celo blockchain. And with that, I'm very happy to hand over to Julia from Celo. She will tell you much more what Celo is about and will be very interesting. If you have any questions, you can reach out later to me.
Hello, good morning. My name is Julia Carvajal. I'm the global head of telecom and media partnerships for Celo. I have just a few minutes, so I've been told I have to be quick. But I'm going to try to give you an overview of what Celo is, why is it interesting for the telco industry, what are the key use cases that we think you can start testing and working on now to position yourselves as valid Web3 players for your customers from early on. We know that there might be complex metaverse use cases out there, but some others are being launched and adopted right now. And our view is that this industry needs to start acting immediately if you want to be perceived as valid players. So what is Celo? Celo is a mobile-first open-source blockchain, layer 1, that makes remittances and payments easy to send at a very small fraction of the current cost versus traditional remittance rails. And it's mobile-first because it has the best client in the industry right now to run on low-cost smartphones, even feature phones. So this is one of the key factors differentiating Celo from other blockchains. So Celo is a blockchain that has launched stable coins in multiple currencies, which is the other key differentiating factor of Celo, because there's very few blockchains out there that have different stable coins, and that makes it an ideal payments platform for Web3 environment. We also have developed key web applications, such as a mobile wallet, ideally designed for consumer use, such as Jens was describing. It can be used for consumer remittances, for example, or peer-to-peer send of digital assets, but also other B2B use cases important for the telco industry, such as roaming B2B settlements or IoT micropayments. And there are many advantages of using Celo stablecoins over fiat as means of payment and money transfer. It's extremely low cost. It takes less than $0.01 per transaction, irrespective of the amount sent. It's extremely fast, less than 5 seconds to complete a transaction. It works cross-border interoperably. It provides a very easy customer experience because we map the mobile phone number to the wallet. So you have this kind of Venmo for crypto experience. Also, Celo doesn't charge FX costs between its stable coins, and this is one of the key drivers of cost in money transfers. So that's another big factor. and it's programmable money, right? Cello has full EVM compatibility that would allow telcos to launch the most advanced FinTech innovations. Also, Cello is green. It's programmed so that in every transaction, there's a percentage of block rewards that are assigned for neutralized carbon emissions. And also, it's working to include natural back assets in its reserve, so that the more Cello grows, the more, for example, tokenized land assets are purchased. So, the reason why Cello has placed a great emphasis on mobile is because we have global ambitions. We want to work globally. And particularly in developing markets where a large share of the population might be unbanked, but 93% owns a mobile phone. Developing markets receive a very large share of remittances from developed markets. And this is also where the financial systems are particularly expensive, inefficient, and experiencing high inflation. So the use of stable coins through mobile is particularly attractive for those reasons. We also know that the future platform of the Metaverse is also mobile, so being mobile first is also a key advantage for developed markets. The internet, as Jens was showing before, a curve of the growth of crypto versus the internet, you could see that the internet required less than 25 years to reach 4 billion people. And digital assets are the digital goods of this Web3 economy. So basically, we are at the forefront of a massive wave of growth and innovation. And this represents a massive opportunities for telcos, because your biggest assets are your customers. The large majority of your customers today do not have access neither to those services or expertise to use them. And this is something that telcos could provide, to distribute and educate with the local knowledge and proximity to the customer that you have. And I think that the way forward for telcos, as you don't have core software expertise, is partnerships. You can white label solutions on a rev share basis to enter this space, start engaging, start learning, and grow from there. So distribution of these services for me represents a massive new growth area that you could launch at minimal CapEx and OpEx by partnering with relevant players. I'm very happy to work with you on this. So what are the key use cases? As I was saying, telcos can white label Cello's wallets, leveraging Cello's technology and partner banking licenses to enter remittances, NFTs, crypto trading, as well as fintech services for consumers at minimal CapEx and OpEx. This combination of technology and licenses greatly reduces the traditional barriers of entry that telcos have faced in the past to enter fintech. Also, this wallet can be linked to interesting loyalty reward programs driven from stable crypto rewards, so no risk, and something that can be a very interesting application for mobile operators. On the business side, we have B2B settlement payments that can be performed, for example, on roaming, fixed line, or IoT. With the Cello stablecoins on the Clear platform, Clear is performing roaming settlements with 14 of the largest telcos in the world, and Cello has integrated Cello as form of payment. Cello is also ideal for micropayments, such as those that can happen with IoT applications because of the low cost, speed, and cross-border capabilities. Another use case that has been really popular is the launch of NFT marketplaces. We have seen the explosive growth of NFTs, not only on art and collectibles, but also in other applications such as ticketing, identity, carbon credits, metaverse items, and even financial services. Telcos can leverage the relationships they have with businesses in sports, media, commercial brand, and support them in launching their own NFT services for consumers. You can have an NFT as a service platform while labeling a ready-made solution from one of our partners and easily enter this space at low CapEx and low OpEx. We could think of brands such as Manchester United or a concert for Adele, where you can do ticketings, or Red Bull for sports events. All of these are looking to enter for NFT use cases. You could think of fund tokens. All of these are use cases that are ready to be exploited today. And finally, we have the tokenization of telco assets. We know that the internet's still not ready for the metaverse, to provide the low latency connectivity that is required for these immersive experiences. So we are working with a partner as well to help telcos develop properly in this space. As I said, with regards to wallets, operators have the opportunity to label one of our wallets or their other wallets that use Celo assets or include Celo assets in their own wallet, and launch their own services at minimal CapEx and OpEx, and control the fees charged to end consumers, control the margins, and own the full end-to-end customer experience. And from there, integrate a wealth of other services, such as we discussed before: remittances, NFTs, payments, debit card to pay in merchant payments, loans, insurance, and loyalty rewards, as we were discussing before. And I've been talking to many telcos, and the feedback that I've been getting is that many of you want us to provide the appropriate banking licenses, as you do not want to be regulated. You want to see the proper KYC, AML validated flows by your legal teams, and a wallet that provides a superb customer experience. And that's exactly what Celo is aiming to provide: a full solution with global licenses, global interoperable wallets that can be white label, and global cash-out networks so that you can send and receive digital assets anywhere in the world and cash out as well at minimal CapEx and OpEx. So Celo Governance Token has an amazing industry backing from high-profile VCs such as Anderson Horowitz, Polychain Capital, PayU, General Catalyst, Deutsche Telekom, Jack Dorsey and Reeve Hoffman, etc., and supported by over 120 companies. So we have just a few minutes today, but please take my email and be in contact. We can take it from there. Thank you very much.
Thanks very much, Julia, and thanks you, Jens. And so we've got some time. I think I'll just be able to ask the panel one question each, I think. So if you could bring them back, my panelists back up on stage, that'd be super. So need to put. I think I'll just stand and I can keep my mask off. Sophia, could I start with you? So there's a huge amount of press coverage about digital assets every day. There's a good news story, there's a bad news story. So what are the top 2 or 3 criteria, the 2 or 3 points that you look at that show that this is actually real and it's not just hype?
Yeah, is my microphone working?
Yeah.
Yes, it is. Yeah, that's a great question, Brian. Thank you for that. And the first thing I'm going to say is it's about our clients, what our clients want, what use cases they're after, and what the demand piece is. We've already seen clients active in the space, and we've responded. We were one of the lead managers, for example, for a Bitcoin mining company IPO and their NASDAQ listing. So that's number one. We're going to, of course, look at the client piece, what they want, and how we can serve them better in the future. Then we're also going to look at what's happening in the outside world. So that's another metric. We're going to look at the market cap. We're going to look at the volumes. We're also going to look at to what degree digital assets are embedded in external tech projects. And we've seen various startups pivot in this space. For example, they're starting to look at NFTs, whereas in the past they were not looking at these things at all. So we're going to look at those outside metrics as well. And of course, we're going to look at what regulators, policymakers, and central banks are doing. They're actively getting involved in understanding the space, setting the direction, and we're starting to see rules emerge. So those 3 things.
Thank you. Thank you. Jens, if I could move on to you. Obviously, this is a new asset class, and it could develop in a number of ways. So how did DT decide where to start?
So basically what we did, I mean, when the whole story of Web3, of blockchains came up, we were not necessarily looking, I mean, okay, now we have new asset class, I mean, how do we handle this? What do we do with that? We were more or less looking into the opportunities, what blockchains are enabled for our industry, what they can do. And yes, I mean, if you deep dive into that, you need to figure out, okay, how do I handle tokens? How do I handle digital currencies? What needs to be done? And that's basically, it was a step-by-step approach until we really got there. And it took some time, but now we know, I mean, we need to continue. We won't go back. I mean, it's offering so much interesting opportunities, and for sure, infrastructure for blockchain networks is a valid business model. And if you want to engage in that, you will find a way how to handle digital assets, how to do it from a legal perspective, from a finance perspective. So that's definitely possible.
Thank you. Thanks, Jens. And Julia, from Cello's perspective, I think you mentioned it in your slides. How does Cello mitigate or reduce the risk for telcos of entering this new asset class?
Yes. So, you know, operators have the opportunity to leverage Cello's technology and parallel banking licenses. They really do not need to provide any investment on infrastructure, right? They can white label a solution. The gas fees are extremely low at $0.01 per transaction. And basically, with minimal investment, start generating business cases and revenue just by providing access to the customer base. And you know, the solutions are also there to be white label, so that the operator also feels in control of the customer, you know, that they are owning the customer and the business that they're launching, and that they keep the proposition, control of the proposition and the business case.
Super, thank you. I think we start a little bit late, so I need to catch up some time. So I think I'm going to leave it there now. So on behalf of the GSMA and the audience, I'd really like to express our thanks to Sophia, Jens and Julia for really insightful presentations. As you can see from the decks, it wasn't done last night. There was some real preparation and work that's gone into this. So we're very grateful for their support this morning on a really interesting and exciting subject. So if you could perhaps put your hands together for our audience. Thank you. And just to close off, our next session will start at 11:30, when we'll be looking at this challenge of fraud and how the mobile ecosystem is responding to scam attacks. And I think, as I said earlier, we're creating a new forum from the end of March, and here is the QR code that you can scan to do that. So hope you enjoyed the session. Hope to see you later. Big thanks to all our speakers, who I'm sure will be around to questions if you'd like to catch them. Thanks for joining us. See you later.